First of all, at the end of 2014, the airline started the turnaround plan. And one of the key elements in the turnaround plan is to do the restructuring of the current debt and restructuring of the trade payables. Of course, this was an essential item because at that time, the debt was above $350 million, and of course with a negative equity. So based on that, we started working on more than one item. We needed to reach to a consolidation and refinancing of the current debt. We needed also to have to partially pay the trade payables at that time. We needed to pay these amounts partially in order to enable us to get favorable terms and renegotiate the tenor of this debt. Also, we were looking for something to make the refinancing of the pre-delivery payments of the 787 Dreamliners, and this was part also of the turnaround plan. We were looking for having more efficient aircraft and also in enhancing the ownership structure of the fleet at RJ. And of course, we were trying to find something that will give us a grace period in order to concentrate more on the business and have more liquidity to support the turnaround plan. But let me, before the objectives, give you a brief about the capital increase and the importance of having the capital structuring. Actually, in 2015, the airline and the shareholders took the decision of increasing the capital of $280 million. And then the government stepped in and gave a commitment to underwrite 50% of this amount, which was $140 million. Of course, this was a very positive message sent to the market and to the other major shareholders, which enabled us to get the major shareholders on board into the capital increase and also enabled RJ to get the loan needed in order to restructure all the operations needed and to get a good deal and good pricing for the needed structure. For the objectives part, yes, I think all the objectives were met. And in addition to meeting the objectives that I stated above previously, it was also that we were able to tap the local, the regional, Islamic and conventional liquidity. And we believe that this is an opportunity. It opened channels for us to get further deals for future expansion, such as aircraft financing.
Well, given where the airline was when we engaged with them and the need to go out in the market with a bankable solution, a few things needed to be included in the package, including the capital injection, the ownership. It included also the turnaround plan. Banks needed to be comfortable that the airline's obligations and its way forward is planned, is managed properly and on the right track. So these critical elements were included. We also anchored the transaction with one local, one regional bank. So by the time we went out to the market, we had a good story about the turnaround. We had a good story about the capital structure of the airline. And we also had confirmation from a regional bank and a confirmation from a local bank that this is a bankable deal. To be honest with you, most of the heavy lifting was done by a range of stakeholders before launching. That allowed us to be in a position where the deal was oversubscribed, attracted good liquidity. So it was the front-end work that was important. That is the burden that the government, the shareholders, the airline had to help us with in order to get us to a point where we're reaching the market with a good story, with anchor banks at that point, and had the ability to tap in GCC, local, Islamic, conventional banks, gave us the best chance at success. And that's why the deal was able to be syndicated quickly. Let me just step back for a second and tell you this was not just a debut transaction for RJ. This was the only syndication that was done in Jordan last year. This was a debut syndication for RJ, as well as this was a debut tapping of Islamic liquidity for RJ. This was the first time RJ has approached that. But to get back to your question, the fact that Mashreq has been very active in the market of structuring and distributing IATA-backed receivables. We've been very successful in doing that for airlines in the GCC, Indian subcontinent, and now in the Levant. This was the first time that we approached the Levant region. This deal allowed liquidity from the GCC to finance that structure now for an airline in the Levant. That's number one. Number two, with regards to Jordan and the development of Jordan, RJ is a very strategic national treasure flag airline for Jordan. Jordan does not have the benefit of having multiple airlines or having a port or trains. This is the only way for people to come visit Jordan, to come and do trade for Jordan. So it is an important strategic asset for the country. Its health and its development is important to key sectors like tourism and trade and business. With respect to the development of the syndicated market, this particular deal has raised the interest of the GCC banks in doing deals first with airlines, and most importantly in an area that they haven't done a lot of deals in, namely the Levant, North Africa, areas outside of their home country. In addition, this deal has attracted the interest of airlines and aircraft manufacturers that have been engaged constantly on dialogues with their clients, namely the airlines, on how to get more efficient solutions, financing solutions. And it was interesting to start hearing from those aircraft manufacturers wanting to engage Mashreq and the MLAs with airlines that otherwise in their home country had issues getting financing. It raised the bar, it raised the appeal to those type of structures around the region.